Hello traders, welcome to FreeFX. This video is a free educational video, so please make sure that you take any advice from the video with a pinch of salt and treat it as free advice, but don't bet the farm on it. So this video is a continuation of video from last week. We're treating the same pair, which is the Pound-Kiwi. Today I just want to put it into perspective, considering the move that we had last week and really what an amazing move that was. So we're going to look back onto this, and I've got the weekly chart here. So just to give you a sense of the situation, we have the consecutive bars indicator. Now this is a really useful one. I'm using FXCM Marketscope 2.0. This is the desktop trading station. So you can see that the number of runs we've had to the upside, we now have 9 consecutive weeks to the upside, and we totaled about 3,000 pips. This is a very, very important breakpoint because we've not had 9 consecutive weeks to the upside. I've looked back several years, so this is a record. Now records means that we're not prepared, we're not really sure how long this can continue and at which point we will revert back to the downside. Looking further back, you can see on this line that I've drawn just tonight to show we have not many times where we've tested it before, back in 2011 and 2010, but we were coming from a long bear trend, so we did actually have an attempt there, but then we plunged further down to these levels. So this is a particularly important point. As I was saying last week, we could say that this is an inverted head and shoulders pattern. So we don't have a volume indicator for this particular pair because it's a synthetic pair. We do have a volume indicator obviously for the pound dollar, the Kiwi dollar, etc. And from them we can gauge the level of interest in particular moves, but we don't actually have it for the Pound-Kiwi. Therefore we can only really see at the ATR level what sort of interest there is in the market, or how far the pair did move. And as from a weekly chart, we can see that we are sort of recuperating ground from these quieter weeks to higher numbers. Now the question is, what happened last week? And for that, I think we want to have a look at the hourly chart. This was the day of the rate cut, so the governor came out in full force. Again, really surprising the market, which hadn't really put down a rate cut as a high probability event. I think it was about 44%. The economists had it down as a possible scenario. And because it was a surprise event, and because the Kiwi was the previous year, 2014, such a bullish pair in terms of the hawkishness in terms of the rate increases, we are completely at the opposite end of the spectrum. So the pair has been beaten down. This is the Kiwi dollar I'm talking about. The Pound-Kiwi reacted even more strongly than the Kiwi dollar, and we have this candle which was on the hour of the rate release and of the press conference. This measures about 450 pips. Okay, I'll measure it here live so you can see it's 450 odd pips, which is a staggeringly impressive move even by the sort of standard ATR for this pair on the daily chart. So we had this massive pair, and then more, because it didn't stop at this 220 level. It didn't stop at this 220 level. It carried on, and it went past 210. Sorry, 221 and 222. Okay, and it touched 223. So if anybody has any doubts that this pair is or was capable of moving higher from lower levels where we were at before, well, this is proof that this pair has a long way to go. So from down here, where do we stop? And this is the question that we're asking earlier. Where do we stop? Do we stop at 223 or will it continue? what is next on the horizon? Well, we have obviously the FOMC rate decision, and the FOMC rate decision is a quarterly event in June, so this could move the markets considerably. Therefore, we want to pay attention and see how that is going to move all the dollar pairs, including the Kiwi dollar. Now, obviously, we have a dollar which is moving higher. This is a dollar, so the dollar has made some progress. Okay, this is the weekly chart. Making to the daily chart, you can see that it has made progress after some doubts. So it moved up, obviously, all of 2015, and we're going into this period of sort of consolidation. It's not really a reversal. It doesn't look like a reversal, or at least not yet. But we waited. The March event came. There was no rate rise then. The June event came. No rate rise. These are the quarterly events. So obviously it's very important because of a lot of things that will be said, and everybody will be watching the chairwoman's words very carefully. So if the Fed should come out saying the rate rise is likely to be in the next quarter, and that would obviously, Fed funds futures are putting it down to January of 2016 already, so pushed it back into next year. But so the surprise element actually would be a September rate rise, although the majority of the market expected to be September. So there is actually a possibility of that. I'd like to go into finally what is a bigger perspective. This is the Pound-Kiwi showing a very historic framework. We're looking at the birth of the New Zealand dollar, which was 1967. So the chart starts about here. And you can see that this is the Pound-Kiwi, so from the birth of the New Zealand dollar, which is basically the New Zealand dollar substituting the New Zealand pound. So after this pair moved higher and higher and higher, and it reached these staggering levels above 3,500. Now we're actually down to this, which, looking back, you do see a line through. And this line through goes back all the way to the 70s. Now, it's not to say that it is a supply-demand level currently, but visually you can certainly see that there's some kind of resemblance to a level that that has a sort of historical line in the sand. Now, we have to see whether this is the case or not. We might just plow straight through it. The way the Pound-Kiwi has been moving recently, you think it could never stop going to the upside. It certainly might just be the case that there's nothing there really to prevent it. The pound has expectations to rise, much more so than the Kiwi, which even in the words of the governor keeps, is a currency that's overvalued, so, and it's getting rate cuts. So how much more proof would any trader or any money invested in this actually need to not sort of seek higher returns? So the Kiwi looking very bearish, and the pound taking advantage of that does actually encourage anybody in this trading area for the Pound-Kiwi to the upside. So having said that, this historical perspective doesn't actually tell us what will happen next, because, well, it doesn't really give us any clear indication of what this is in the context of a historic chart like this, because these gigantic moves happened over a number of years, so we have to treat it with a degree of caution. However, it is worth remembering this, because going back to the charts, we have certainly something to learn from that. For example, we have come a long way in this bear trend, and again we've come a long way in this bear trend, and we could continue lower, because there were lower levels, so it's not to say that we couldn't continue lower. But the recovery period here could certainly reinitiate now, and we may not reach these historic levels yet, but certainly it's worth bearing in mind that there was a precedent. So Now, just very briefly, I'd like to thank you all for watching, and if you have any questions on this pair, please let me know by leaving comments on the YouTube channel. Thank you very much for listening, and happy trading. Good luck next week.